Hello, and welcome to Wealth is Possible, the show where we talk about personal finance and building wealth. We are your hosts, Vino, Vince, and Evan. We'll be discussing various methods of building wealth and growing your cash flow, including the stock market, real estate, cryptocurrency, and various business ventures.
Welcome back to Wealth is Possible, everybody.
What's up, everybody?
What's up? Hey. We're filming an episode after 2 months.
Yeah.
The last time we filmed was in January.
Yeah.
After all the feedback and everything that we got from the first few episodes, we decided that, what would be the most helpful, useful episode we could film that would help the most amount of people.
Yeah, that's kind of like the whole reason we started the podcast, right?
Exactly, right? Because there's so many episodes we're gonna put out over the next months and years. But right now, what would be the most impactful episode? And the episode that we're talking about today is what is an ETF? You know what I mean? Like, you hear ETF all the time.
Yeah.
You hear stocks all the time.
ETF.
What's an ETF?
It doesn't mean et.
Yeah.
It's not a et.
The fact is, most people, everybody wants to invest in the stock market.
Yeah.
It's cool to make a lot of money.
Hondo.
You see it on TV, you see Elon Musk, you hear Tesla,
you hear about all
Apple.
the gains people are getting.
Right? And everyone wants to invest in the stock market, but the reality is, if you really want to make long-term money in the stock market, you need to do the research. You have to have the time to do the research on every company and keep up to date with every company that you're invested in.
And like we mentioned in one of the other episodes, you got to study the fundamentals. You got to study the fundamentals, like you're studying for your undergrad,
like a degree.
Exactly.
Yeah.
Exactly. And that's what it really takes, because sure, you could do the research initially and just buy a company, because there's great potential, and you just let it sit there for 5-10 years, and maybe some crazy shit happens, like a scandal or something, management just gets lazy,
CEO walks out.
They start buying, they start acquiring just terrible, making terrible decisions with their money, and a great promising company is now just going to zero, or they go bankrupt, they don't manage their money wisely, whatever, right? So you have to keep up with it, right? And obviously that's why most people buy the best companies in the world, because they have
they don't want that risk. They don't.
The best companies in the world, they manage.
They want to be as safe as possible.
Like the Apples and all that.
Not only do they manage their money, they also manage their public perception, and
exactly
a lot of they go the whole 9 yards.
Apple has to answer to Warren Buffett. Warren Buffett owns a lot of Apple. Berkshire probably owns, I don't know if he owns it in his personal, or I think it's Berkshire owns a good chunk of Apple. You know what I mean?
Okay.
So you got to answer to some serious investors, so you got to be on top of your shit.
The companies are always making sure that their shareholders are going to be happy with the moves they make, right? At least the good companies.
The good companies. Right?
Yeah.
So on that note, essentially 95% of people are not going to have that time. A lot of people, are so invested in their careers and family, this and that,
wife, kids.
Right? You have so many things going on, and I'm sure you want to sleep well at night. You want a hands-off approach to investing. You still want to invest in the stock market. You still want to participate.
You might be willing to put in the time to do the due diligence, all this research, but you don't have that time.
Exactly. So I guess it really comes down to who you really are, and where your passions are. Obviously not going to just stick with just the stock. Like some people, they have multiple investments.
Exactly.
So whatever
it's like the most hands-off way to get exposure to the stock market. Is through ETFs, index funds. Right. That's what it is.
What a great segment introduction to the podcast. Hey, wow.
So you have a lot of money sitting around, and you don't have the time to buy individual stocks. And you want to own everything. You want to own everything and
be safe and make good gains.
And with the U.S. economy, all these companies, Apple, Amazon, all the new technology, innovation, you want to get exposure to that in the future. Right? all the the growth that these companies are going to have. You want to get exposure to that, and you want to sleep well at night. Not even think about it. Right. And all your money is in there, and your money is growing, and you're trying to beat inflation. You know what I mean? If inflation happens to be less than 10%, but like which is not. But
it's getting right around there right now.
You don't want to lose too badly to inflation.
Exactly.
If you do nothing with your money.
Exactly.
So it's just a passive way to kind of try to keep up with inflation at the very least, right? So that's why we decided to make an episode on ETFs.
Okay.
Sick. I'm glad we're here.
Yeah. Because, most people, obviously we're going to go into episodes on individual stocks and talking about individual stocks in the future.
Yeah.
But right now, what most people can actually do is invest in the stock market with no knowledge whatsoever and essentially understand what an ETF is, what it means when you buy an ETF. And essentially kind of like how safe it is, rather than being scared of the stock market like the media wants you to be. Stock market's volatile. That's all you hear all the time. It's volatile.
Anything that requires you to make money, they're gonna make you not do it.
Exactly. There's always some sort of barrier. And
there's always gonna be that fear,
right?
Exactly.
Okay. So.
But once again, I'm gonna dive in here. If you guys are watching this, you guys love our shit, make sure you guys are liking our stuff. It helps the algorithms helps push it out to other people. And also share it to your personal pages as well. Share it to somebody who you think is going to enjoy it, because the more people who watch, the more time we can dedicate towards this. And we love doing this stuff.
100%. We put a lot of time and effort.
Into it.
Like this out for you guys.
Exactly. Like behind the scenes, on the scenes. Like there's a lot that goes behind the scenes. We've all incorporated different aspects of the podcast into our personal lives, and we're to
make sure we're staying on schedule.
Exactly. Right. And a lot of personal development, a lot of personal growth comes from like being responsible. We hold each other responsible too. We get into like our own things and stuff within our corporation, but we do it for the greater picture. So just for that, just drop a thumbs up. And if you guys are watching,
smash the like.
Exactly. And if you guys are watching regularly and you're not subscribed, hit that subscribe button right now. Because apparently YouTube needs that shit apparently, right? So
all right, so the next thing I'm gonna show you guys is this thread that I saw on Twitter.
Okay.
And I've been searching.
Good old Twitter.
Yeah, I've been I've been searching businesses and like how to build businesses and stuff like that, and
you follow a lot of good quality pages on Twitter, and these guys drop they have Twitter over the years. I've been on Twitter for I think me and you have been on Twitter for more than 10 years now.
10 years,
yeah. I opened up Twitter in 2009.
Wow.
Yeah, that's more than 10 years now. I think 2009 around that same time.
Veterans.
Yeah, we right, but I think Twitter went from personally, I think Twitter went from just being a place where you can kind of express your own thoughts to a place where you can actually learn, right? So lately I've been looking at Twitter kind of it's more so like Reddit now, right? Where it becomes like a thread, and you see people you can learn some serious shit.
You can learn
Twitter.
so much so fast.
So Twitter. Quickly, yeah. It's just straight to the point.
It's curated information, right?
Yeah,
kind of like what we're doing in this podcast.
Exactly.
Wow. It's crazy, right? And the algorithm basically, I guess it knew that I was interested in learning how businesses are built.
Yes.
And it showed me this guy.
Algorithm knows.
My algorithm just shows me cars.
Yeah. So I don't know if you guys have seen this on Instagram or anywhere. This someone built this for hundreds of millions of dollars.
I literally seen this recently. No, I think
seen it on YouTube.
Somebody
and
bought this.
Yeah.
I think somebody bought it. It's the most expensive real estate in US.
You kind of are foreshadowing what.
Oh gosh.
Yeah. The guy who bought it. You know who bought it?
It was a brown guy, no? I think it was a brown guy.
His name is Richard Sagian.
I don't know. Maybe he's not a brown guy. Yeah.
So he was born in 1982. I'll just go through this.
Yeah, please.
Trust me. Wait till you find out what company he started.
Jeez.
Okay. Google.
No. He's born in 1982. He's pretty young.
Pornhub.
No. But
please. Sorry. Please get into it. Yes.
Oh, actually, you're right. He is part of a minority group. Jewish Iranians.
I don't think Jewish people are part of a minority
Iranians,
group.
Though. No, Jewish people are part of a minority
Is it Iranians
group.
or I think Joe Biden calls it uraniums.
Okay, so his family was part of. So this is the guy who bought this $100 million plus property.
Okay.
So his family is part of a minority group of Jewish Iranians who fled during the revolution. After moving to America, they got into women's fashion retail.
Okay.
It's kind of a segue.
Is this Fashion Nova?
That's kind of a segue. Yeah, don't ruin anything, man. Okay.
Yo, Mike, come on, bro.
Yeah. After this guy's always like guessing.
This guy's psychic, guys.
Yeah. So after moving to America, they got into women's fashion retail. In 2006, Richard followed in their footsteps. He started his own store. His idea was simple: affordable, unique clothes to wear to the club. His goal was to open 100, but he stopped at 5. Early on, he had the idea of opening up an internet store. This is him, by the way.
Let me see.
Okay.
It's the guy.
He looks like
He looks like he would buy this. The guy who would buy this house.
Yeah.
So the web developer he hired quickly talked him out of it, and he was like, "Where will you get the traffic?" And that was a question Richard didn't have the answer to. And after a few years, the retail stores were going nowhere.
Yeah.
In 2013, he noticed several stores online were selling the same clothes for over twice what he charged.
Yep.
He created an Instagram account, took some of the best-selling styles, and started posting them every day. At first, it was crickets, but then something magical happened. His customers started posting their own pictures with his clothes.
Yes, I actually see a lot of girls like they would post Fashion Nova and then like they'll just tag Fashion Nova.
Trust me.
Like that's like the caption. It'll be like Fashion Nova.
Yeah. And then out of
I don't know
nowhere,
if they still do that, but yeah.
I think they do. And out of nowhere, his account went to 60,000 plus followers on Instagram in a matter of weeks.
Yeah.
Hopefully that can happen with
that's
possible. Yeah,
Speaking
yeah.
to existence.
yeah,
right?
you know.
It's gonna happen.
Yeah, so he also noticed that something about the posters and their comments. So they tended to be brown or black, young, curvy, and urban.
Urban, I love that. Urban, yeah. That's like
such a journalist thing.
Yeah,
to
like
say,
a Caucasian guy wrote that. Like a Caucasian.
it's actually a fucking Punjabi guy. Eh?
No way.
Look,
Jesse.
Jaswinder.
That's the real name.
I think he got this from an article. He probably got this from an article made into a thread.
Okay,
So let's see here. Okay, so Richard realized that this group wasn't used to seeing themselves online or having clothes designed for their bodies. Something clicked. There was untapped potential, but now what? He created a Shopify website, of course, and started building it out. Each time his team said he was ready to launch, he pushed it back. Every single time.
Why is that?
So despite the fast growing IG presence, he was afraid that no one would buy anything.
He had a little bit of hesitation there.
Analysis paralysis.
Yeah.
So
So
it happens
remember,
to everyone, right?
yeah. So
Yeah.
like, he has all these online these retail stores, but
Yeah.
he didn't want to launch his online store.
Yeah.
This was
Right.
this was obviously back in the days when online shopping still wasn't.
Yes.
big
What
like
year was
that,
it again?
right?
2013.
Oh yeah, very, very, very early.
I mean, even Amazon wasn't huge or anything at that point, right? So,
I think Amazon was like, like it wasn't like
was
like
in
as
infancy.
normal as
Yeah.
it is right now.
Yeah,
Yeah. Like
yeah.
like
it was still at the point where people are like, "Oh, online shopping is not going to work because of the shipping costs and this and that," right?
that, and I
Yeah.
think it's a combination. It's like
They didn't have Prime. Amazon didn't have Prime for sure.
I'm not
at
sure
time.
about that.
I don't think they had Prime.
It's more so like even thinking back to me in 2013. I'm like, yo, why would I buy it online when I can just go in store and get it right now?
Yeah.
Right.
Yeah.
But like
There
Prime,
wasn't that
that-
trust factor. You didn't
that
have the trust
paradigm
factor with
shift
Amazon though.
hadn't
If you
happened
trusted it, you would have bought it. Right
It's not
now,
even-
it's like right away. You're like,
no, because
yo,
it's like it's just a convenience factor, right? Because back in the day, it's like, okay, if I want to go pick it up right now. I want to go check it out the store, see what my options are.
Yeah.
But like, I guess now it's just like you can just open up your phone and you just buy it, you forget about it, and then like you come home and it's like Christmas.
Yeah.
Whenever you get something from
But
like,
it's
Amazon.
reliable, right?
It's reliable, yes,
Because
yeah.
you trust it, right?
Exactly.
So basically, despite the fast-growing IG presence, he was afraid no one would buy anything. Finally, after 3 false starts, he launched FashionNova.com.
Wow.
And that weekend, he completely sold out.
That's a good name,
Damn.
Fashion Nova.
Yeah. I think this is the website.
Wow.
I think that was the original website, right?
Yeah.
But
Right.
yo, I appreciate you guys are listening. You know. I wonder what we sound like. I wonder if you guys
Hope we
even-
sound good.
Yeah, hope we sound good. I wonder if you guys like know what we look like.
No, they do. The cover art.
Oh, okay.
That's how we have the cover
Yes.
art.
So
you know?
yes, we are brown.
If you couldn't tell by our voices, right?
Exactly.
So Richard had completely underestimated the size of his insight and the opportunity he had found. He had to get lots of styles and clothes he made quickly. From this problem, he hatched what he calls ultra fast fashion. And here's how it works. They go from an idea to samples in less than 24 hours. You come with an idea for clothes and it becomes a sample in less than 24 hours.
I noticed that with the I'm not like I noticed this with like the clothes industry, like their clothes are like very like, it's like they get it in, it does, and they sell whatever they sell, and then boom, liquidate it, and then it goes to the new style. Yeah, it's always new shit. So
I think this guy started that shit, bro.
Wow, really?
Like all the brands that came after, like this guy started that shit, bro.
No way.
They probably seen his success and they replicated it, right? It's like if Amazon sees a successful product, they just replicate it, right? It's like that.
Yo, that's some snake shit. What these guys are doing, eh? I'm so glad I got out of that industry.
Okay, yeah. So the sample and then the samples go into models of the clothing in less than 48 hours.
Wow.
Okay, so they had like some sort of system.
I don't know if it's talking about models as in people modeling the clothing or models as in like
model of the clothing. Yeah.
Like the actual the first drop or whatever.
Yes. Anybody who has more information, drop it down in the comment section.
Yeah. So most things are manufactured locally to speed it up. Within 2 weeks, they're selling the product with 2-day delivery.
Wow.
2-day delivery, bro.
It's a very quick process.
For that time, that was amazing.
But this is in 2020 they were doing that. 2-day delivery.
You guys ahead of the game.
Yeah.
Jeez.
Makes sense why you bought the most expensive real estate in US, you know?
Yeah. And by the end you'll know why he can afford it and shit.
Okay.
So within 2 weeks, so they tested over 1,000 plus items per week. And none of this existed in 2013. What the hell? Okay. So he was just holding on for dear life and trying to fulfill the demand as fast as it came. Within 18 months of launching the store, they had done over 400 million in sales.
Wow.
In 18 months.
That's very impressive.
Less than 2 years.
Yeah.
$400 million, bro.
That's insane. Really good. That's really good.
It's insane.
So I feel like people listen to stories like this and they're like, I've been doing my business for 3 years and I only made like $10,000 and shit. Fuck this, bro. This guy's
revolutionary shit. You know what I mean? You gotta create something that doesn't exist that's helping solve a problem.
Just imagine the discipline to be able to do that set process for like that long. Like for them to achieve like that level of success, it can't all be sheer luck. It has to be some sort of like
he had to fail. He's failing over and over again first, right?
There's a lot of hard work behind the scenes for sure that we can't even imagine, really.
Exactly.
Right?
Yeah. So then the flywheel was clear. So basically, they would sell the clothes. People would post them on Instagram. They offered free clothes to influencers who post on IG.
Smart.
There you go.
Were they the first ones to do that?
They started that, I'm pretty sure.
Maybe.
I'm pretty sure.
Now there's a program with 3,000 plus people. Only 3,000 plus people right now.
I swear, like every girl's a Fashion Nova model.
It seems like that.
But they probably have qualifications. You probably have to have X number of followers. That's why every girl probably tries to do it. Maybe I don't know. Maybe girls know more about this. Maybe there's some new shit.
If you're a girl listening to this, please put it in the comment section. We don't know.
But this is back then, right? And then as long as they did that, they sell more clothes.
Yeah.
Right?
Yeah.
So in 2015, Richard wanted to take it to the next level. So he tried reaching out to big celebrities with no luck. So he found a small rap artist who fit the style of his clothes perfectly.
Who is it?
Guess.
Nicki Minaj?
Cardi B, sorry.
Cardi Minaj? Yeah, this guy's juice.
Cardi B. He got it again, bro. This guy's
Loki knows all this shit.
This guy read this thread.
Genius.
This guy read this thread before. This guy's on Twitter. This guy's
on Twitter. Yeah. This guy's like a fake account.
Okay, so Cardi loved the clothes and began posting about them all the time, but it didn't move the needle that much. And in 2017, that all changed. Her song Bodak Yellow became a global #1 hit. And she and Richard doubled down on their partnership, which continues strongly to this day. Both grew together. And then other celebrities like the Kardashians jumped on, and by the end of 2017, their sales were up 600%.
That's insane.
Wow.
That's insane.
600%.
It's crazy what an influencer can do, because I remember like when I was studying Amazon, I remember like that was one of the lead marketing strategies, like reaching out to like influencers like that. bro, that thing really pushes your product.
Oh,
So
yeah.
I don't know if he knew that back in 2013, but I know that if he, it seems like, Fashion Nova, from what I've seen, like, once again, like, I'm a guy, I don't really know this shit, but like from what I've seen, Fashion Nova was very revolutionary with the way that they marketed it, right? I feel like they even took
I would agree with that for sure. Like, all the top models were Fashion Nova models and marketers before they did all these other companies.
Yeah. Like,
you saw Fashion Nova everywhere before all these other brands.
Not even like influencer wise, like I would say even with like the regular girl that would take pictures and literally her caption would just be Fashion Nova, for example. I feel like that has like a kind of like a Starbucks model to it, where like people would
It's trendy, right? It became
trendy, and like people will post their cup with their name on it, right? And like, when one girl does it, it made every other girl want to do it too, right? So it kind of created that chain reaction. So I in my personal experience, I think Fashion Nova was the only brand that I've seen do that. And like, I don't know like if it's like some girl thing, but like I know like when one girl does it, like every girl wants to do it, right?
It was a chain reaction that really worked out for them.
And you know how I was talking about flywheel, right?
Yeah.
So I just googled it quickly. What flywheel? I've heard it a lot, right, in like business and stuff.
Yeah.
So basically, a flywheel is a heavy revolving wheel in a machine. That is used to increase the machine's momentum and thereby provide greater stability or reverse of available power during interruptions in the delivery of power to the machine.
I know something to do with the manufacturing.
It's in a car. Flywheel.
Yeah.
I know what a flywheel is.
Yeah.
Whoa.
So they use that in business.
Shit.
This is all part of his flywheel.
Bro, I'm having a second right now.
That is crazy.
These are all different. So here, this is what his flywheel is. So this added to the flywheel and helped Richard create the viral fashion strategy that continue to drive Fashion Nova's growth. Customers and influencers alike credit the brand as serving a segment which is often overlooked by traditional brands, both in marketing and fit. So basically like curvy and like minority women, basically, right?
Urban.
Yeah.
Urban women.
Yeah. So these are the top trending fashion brands of 2018.
Damn.
Number 1, Fashion Nova. Above Louis Vuitton, Versace, Givenchy, Gucci, Alexander McQueen, Dolce & Gabbana,
Good for him.
Dior, everybody, right?
Good for him.
So it's important to have a lot of styles because our customers post so much online and need new clothes. We don't want girls showing up to the club in the same outfit. We need 50 different denim jackets, not just one. That's what he said.
Wow.
And in 2019, though, their speed got them in trouble. The NYT, I don't know what that is, ran a piece that New York Times, that ran a piece that accused Fashion Nova of using illegal labor. While Fashion Nova itself wasn't doing anything, doesn't Nike do that?
Doesn't everybody do illegal labor? What about your iPhone?
Yeah. While Fashion Nova itself wasn't doing anything illegal, they had 700 plus suppliers and a few ran US based sweatshops.
Yep.
Well, it's because it's in the US. It's illegal.
Oh, the sweatshops in the U.S. Okay, so yeah, but if it's like Africa or like China, like fuck them, right?
It's messed up, but it's not illegal.
Yeah. So Fashion Nova quickly got rid of these suppliers and made clarified standards. With COVID, the other shoe dropped. 2 issues plagued Fashion Nova. Delivery times. Fashion Nova was sued and settled after they failed to deliver in less than 30 days to hundreds of customers. Many of their factories saw COVID outbreaks, leading to them and Cardi B donating over $1 million to COVID relief. Today, one of these issues are behind Fashion Nova as they scale at a rapid pace. Richard is extremely press shy and has never shared numbers publicly, but unconfirmed reports have them doing over $1 billion in annual sales with 30% EBITDA margins, which is earnings before interest, taxes, depreciation.
I sort of rewinded back to the case counts and all that stuff. It sounds like a whole bunch of political bullshit to me. You know, like it sounds like. Like I recently read I think it was called The Art of the Deal. Like it's like an old Donald Trump book.
Yeah.
And he was actually talking about building like hotels and like bigger real estate and shit in New York, and it really kind of exposed like the government agencies and how much like they would promote your building or like they would approve zoning and stuff.
Yeah.
If you had like a cut for them, like if you were to give them X amount of dollars and shit instantly,
if you
that's
kept
how the
them
world
happy,
works, though.
right?
That's how the world works.
that's how the world works.
Yeah.
Realistically, that's how the world works. So I think like the fact that
that's why they had to donate the money and shit.
Exactly.
Right?
So I think this guy, for obvious reasons that I'm not gonna talk about on the podcast, didn't want to pay that amount to the government.
Yeah.
And I think that's why there's a whole bunch of backlash that's happening. That happened to him in the past, where like, you know, they're like bad press and all that shit. It all comes with not complying with the government and be like, hey, you know, like, because when the government sees you making a lot of money, they want a cut of it, right? They always want a cut of it,
exactly.
right? So like, I think
they want their taxes somehow, right?
Yeah, they want some sort of cut. Like, sometimes they want beyond the taxes, right? So I think there's some sort of thing that happened behind closed doors that didn't go in their favor. That's why they're like doing all this stuff to make him come down.
It's a good theory.
I mean, they saw a cash cow, right? You gotta milk the cow. You know
exactly. You know.
But yeah, so essentially, the part that I left out. So they did. It's unconfirmed reports, but have them basically doing over $1 billion in sales annually. And guess who owns 100% of the business? Richard.
No way.
No one else owns anything.
Is that publicly traded? Fashion
No.
Wow.
I honestly thought that Kanye owned a piece of it at some point.
I never heard of that. No,
I thought that he did.
Which one was it?
Kanye.
Kanye owns Fashion Nova?
No,
I thought he owned. I thought he was like
thought he did, but
I thought he was a part owner just because of, you know, he's the Kardashians started, you know, promoting.
That's where
shit.
he says Fashion Nova in his music too. You know?
Yeah, that's what I'm saying. So that's what I thought. But maybe he got like paid a lot to promote it. He probably got paid a lot.
You don't need to be part owner to do that.
Yeah, he probably got paid a lot to mention it.
Hopefully we get paid a lot for all the times we mentioned Shake Pay, Wealth Simple, all these guys.
So this is lessons from that story, right? So starting can be scary, but it's worth it. Success always comes with setbacks and challenges. So basically, find the unserved niche and bet big on it. Retail can teach you about direct to consumer, and virality is a strategy.
Yeah,
and anyone can do it.
Yeah.
Pretty much.
I mean, we see that a lot, like especially the last part where you were saying virality, right?
Yeah.
Like people hopping on these viral trends and everything is helping them blow and just grow and get in that starlight these days.
And like, you know, obviously, you know, you can go viral, but you just have to have that strategy to how to best capitalize and maximize your exposure, right?
I think you just, at the end of the day, you just have
to have a plan for sure.
Of course you gotta have a plan, but I think you just had to be relevant in what's relevant.
Yeah, exactly.
You know?
So I just wanted to, you know, share that thread because I found it super interesting.
I appreciate it. That's what gangster.
You know what I'm saying? So
I have we'll do more of these, success, but
we'll do more of these, you know?
I love this.
This is a little bit more in depth though.
This is why I like when Vint is host the show, you know? This guy has a lot of examples.
Yeah, this just shows up on thing. I just bookmark it and I'm like, yo, this would be great for the podcast.
Yeah.
All right, let's get into it then. Let's get into.
Wow, the show didn't even start yet, and it's already this amazing. Whoa, I'm gonna go click the like button.
Yeah, this is just like the you know, the coming soon when you watch the the previews.
Yeah.
Okay, so let's talk about what is an ETF. What right now, like when you hear the word ETF, like before you listen to the podcast, obviously before we talk about this, what is an ETF to you?
It's a ETF.
Yeah, no, exactly. Yeah. What would you have to guess if you were to guess what it is? What is it?
I forgot what it stands for. Is it electronic something fun?
Okay,
right?
no. What about you?
I don't know what it stands for, to be honest. But from my knowledge, it's kind of like an index fund in the sense like there's a group of companies that one certain ETF invests into.
So it's kind of ETF. An index fund is a type of ETF.
Okay.
Yeah. So ETF stands for exchange traded fund. Right.
I was close.
Yeah. Yeah, and essentially, you know, that fund essentially owns a basket. Of stocks.
Okay.
So individual people, you don't have the money, you don't have the time to go out and buy millions and millions of dollars of shares. You can't go buy every single thing.
Yeah, you can't always be on top of everything to watch the news.
Yeah.
You know, yeah.
So but like they essentially like index. I'm just talking about index funds. We're just going to talk about index fund ETFs for this
particular segment.
This segment, this show,
this episode.
There's so many different kinds of ETFs. There's ETFs on individual sectors. Like you can buy a cannabis ETF with all the best cannabis stocks. There's a metaverse ETF with like ETF with like Roblox and like, you know, Facebook.
I think there's even a Bitcoin futures.
There's a
ETF.
Yeah. I haven't heard too good things about that, but but like there's ARK is a famous ETF. You know ARK. ARK is headed by Cathie Wood.
Yes.
and ARK is like super high growth. Like they have, they invest. There's a super. They have the regular ARK, and
is
then
that the ARC, right?
It's
okay.
ARKK.
Oh, ARK. Nice.
ARKK.
Cool.
Okay.
Cool.
Right. This is just one of them. There's different ones. This is like the basic one.
Yes.
And then there's also like the super high growth ARK. But yeah, so there's different kinds of ETFs. Like ARK invests in like like genomics and stuff, and
what is genomics?
Like it's like changing your genes and stuff, modifying gene modification and
gene therapy and all that kind of stuff.
Wow, I know a lot of companies are doing that right now.
Yeah. So, but these guys,
this guy is like the number one conspiracy guy.
No, this is facts, bro.
Yeah.
I'm sorry, guys.
Yeah. Whatever. Anyways, futuristic shit, right? 3D printing, they're invested heavily in 3D printing and like anything that's in the future, EVs and stuff like that.
Yeah.
But like they do their research of like what is going to be innovative in the future. It's called ARK Innovation, right?
Yes. Okay.
They only invest in innovation, like self-driving cars and stuff like that. Companies,
the future, pretty much the future. Yeah.
And they invest in a lot of companies that are they obviously have shares in Tesla and stuff. They hold Tesla. They hold Bitcoin, right?
They hold Bitcoin.
Yeah.
Wow.
That's why. That's all Mr. Vino knows about them.
I know Kathy. She's super bullish.
Yeah.
Do you have her on speed dial and shit?
Yeah, not yet.
Okay, so ETF, right?
Yeah.
So ETF is a basket of goods, right? And in that, basically, it's a basket of goods that essentially you can buy a share of that basket. So it's a basket of goods. So pretend you can own all of the stocks in the S&P 500.
Yes.
You own all of them. You can't buy them though, because do you have the money to buy Apple, Home Depot, every single one?
You don't have the money
stocks?
to buy one of each.
But you're buying into the basket.
But you can buy a share.
You own a piece of something of a basket that owns all of them.
Exactly.
You're owning
That's pretty gangster.
You can buy one share of an ETF that owns multiple companies.
Yes.
Right?
So you get all the growth of all those companies in that basket.
Yeah.
You get exposure to that.
Wow.
Okay.
So if you own, the more shares you own, the more exposure you get to every single company in that basket.
So saying if you're a beginner investor, ETFs is the way to go.
So let me ask you something.
That is
What's
my humble
the difference
opinion.
between the S&P 500
Not financial advice.
and an ETF?
No. So the ETF it's a fund.
Okay.
It's a fund. So to my understanding, investors, you're pooling your money, and then the fund it essentially takes that money and they buy all the S&P 500 stocks in that ETF. We'll go over this. It'll be more clear a little later in the episode.
Yeah.
But they buy all 500 of those stocks. They put millions and millions of dollars into each one, or they weight it. They weight it accordingly to the top growth.
Okay.
Essentially, right? And so ETF is essentially like the basket.
Yeah.
The S&P 500 is what's inside the basket.
Okay. I see. Okay.
The ETF is the basket.
Okay.
You know what I'm saying?
Okay. So just to clarify this, because we're also learning at the same time too, right?
Yes.
So earlier you were saying that there's index funds, and then there's an ETF is a type of index fund.
No, an index fund is a type of ETF. There's other ETFs like that's why I said the cannabis ETF is another type of ETF. There's ETFs that model certain sectors that hold all the stocks in certain sectors.
Okay.
So think of ETF as a basket, right? And S&P 500 index fund will have all the stocks in the S&P 500, right? A Russell index fund will have all the stocks in the Russell Index. Russell Index is like the high growth stock. Russell Index holds Apple, Microsoft, Nvidia, all these guys. Let me go to more items because it's only growth. They don't have the stable companies like the homegrown.
So I'm assuming
speculative growth companies.
I'm assuming this would be highly volatile too, right?
Pardon?
This would be extremely volatile too, no?
It'll be more volatile than the
maybe
NASDAQ.
not extremely volatile like crypto.
It's more volatile than S&P 500 because they don't top sectors by weight. They hold technology, consumer discretionary, healthcare, industrial, and financial services.
Wow. Okay.
ETF is a basket. Whatever's inside is what the fund buys with investors' money. It could be anything. So you can pick and choose whatever ETF you want to buy. So you can
and it
buy
goes by kind of categories, right?
There's
like
different
you said,
categories. There's cannabis.
There's
there's
the high
technology.
growth,
There's
the technology.
innovation.
Are they the same? Is it the same basket that you're buying sections of, or is it its own basket in and of itself? So if you buy like just say you buy like
no, each basket holds
only those
has a purpose.
Okay, no. So just say you buy like for example, you buy
You want to buy automotive companies.
Yeah.
There's the ETF for that.
Okay,
There's probably an ETF for that.
so that ETF. So I want to buy a car ETF.
Yes.
Like if you're bullish,
if
you're bullish on here's a great example.
Yeah.
If you're bullish on electric vehicles, for example,
Yes.
there is an ETF for
I'm not bullish on
exactly.
electric vehicles.
They probably own like Tesla,
if you happen to be,
Rivian, all these Lucid, all these kind of companies, right? Okay.
But like there's probably an ETF for automotive like that owns like Ford, all the manufacturers. Right? And then that essentially the whole point is you're betting big on that sector.
Yes.
You want to own all of them, and you don't want to buy each individual one. You think that in the long term they're all gonna perform. So you buy the whole ETF instead of buying the individual shares.
Exactly. Diversify by getting all of them, and just by buying that one ETF.
Diversify within a sector.
Yes.
You know what I'm saying?
Okay.
Yeah.
Okay.
It's like if you're bullish on all of technology, you just buy the technology. There's technology.
That's
ETFs.
actually pretty cool. Like
You know
it
what I'm
makes investing so much easier.
Exactly.
Definitely clearing things up.
And the S&P 500 index is okay. You don't have a specific sector that you want.
Yeah.
But you're bullish. You want to be
companies, right?
bullish on the best companies in the United States.
Yes.
Yeah.
Done. You own all of them. You sleep well at night. You think Starbucks is going to do well. You think McDonald's is going to do well.
It won't even matter.
You think Google, Amazon,
somebody
Facebook,
doesn't do well, they get kicked out, right?
Exactly.
Yeah.
Like I mean, like not exactly.
Exactly.
But they have to do really, really bad to get kicked out. But like for example, the weighting changes. So for example, Meta, right? You know how the stock drew down like so much lately.
Yes.
They weight it less now. It's weighted less in the portfolio.
Yeah.
So
it has a smaller percentage now, right?
Yeah. So it's not 5% or 2% or whatever. It'll go down to like maybe 0.5% of the S&P 500.
They won't just completely wipe it out.
Yep.
They'll just slowly start tracing back on
the percentage of what the overall. Okay, cool.
Yeah.
That's actually really sick.
Yeah. So let me tell you guys.
Is this a person or a group of people that make the decision, or is it like AI that's doing it at this point?
So are you talking about the S&P 500, which is a completely separate thing from the index fund?
Yeah, so I'm talking about the S&P 500, for example. Just
so
like a
S&P 500. So I was going to get into it a little later, but I might as well answer it right now.
Yeah. Yes.
S&P stands for Standard and Poor's.
Yeah.
And that's a company.
Mm-hmm.
Huh.
And that's a company that does ratings and research on the companies in the United States.
Is it like a boardroom? Is it like a board? Is it kind of like a board that decides on which companies stay based off their performance?
Well, they kind of assess the companies based on size, right? They kind of based on size and performance.
But
right?
do you think it's like an AI at this point that's making the decisions, or do you think it's?
I don't know.
Well, I mean, for the longest time, it was obviously humans.
Probably 100%
at this
humans,
point.
yeah.
I mean, maybe they are bringing in some artificial
unless
intelligence.
they had like some sort of alien technology.
However, they did I'll get into it a little later. They did a study. This is 2012 to 2017, though.
Yeah.
I definitely know it wasn't AI that did the study.
Yeah.
It was a real study, and it was comparing the S&P 500 index to mutual funds. Which is mutual funds are essentially, like I'm kind of going into everything now, but like mutual funds are essentially actively managed.
Okay.
That's the difference.
Yeah.
So when you buy an index fund,
that's why it performs so shit, right?
Yeah. So like that, when you buy a mutual fund, you're essentially betting on the manager of that fund
You're
to
betting
outperform the index. The index is basically you own all 500. You own all of them. Right, so it's very hard to lose.
What are the odds of a mutual fund, or what are the stats of a mutual fund actually beating the S&P 500?
I'm going to get into that later.
Oh my gosh, I'm going too deep into this.
This guy has it all.
Oh my gosh, I'm good with the questions. This guy's good with just knowing everything. You know,
this guy's like Cardi B.
Yeah.
No, he said Cardi Minaj.
Cardi Minaj. Yeah. That's a whole different tier. You know.
Okay, so here's a great example. I think this is gonna be a great example for anyone who still is like, oh, okay, that makes sense, but give me an even more just simple example to understand for what an ETF is.
Okay.
Yeah.
Right? So imagine you're living in the 1800s, you and your friends, you live in the village, and then the city is really, really far away from you.
Okay.
And basically, you want to have access to that market. They have exotic goods in the city.
Oh, yeah.
But you live far away.
I love exotic goods.
Yeah. You live far away, and you don't have the time to go to the city all the time. And you don't have the resources to go to the city all the time and buy all the exotic goods because you want them. They're amazing. You really
You want to
them.
participate in that trade.
In that trade, yeah.
You want
saying the Mate Vandi doesn't go that far, eh?
Exactly.
It's a little bit of Sri Lankan Tamil.
Exactly. Yeah, we'll translate that.
Yeah,
We'll translate
Mate
that.
Vandi just means it's a cow buggy.
It's like
Yeah. We'll translate it. Huh?
Yeah.
Oh, you just use it.
Yeah, I just yeah. I'm not trying to write out the subtitles and shit. Yeah, I'm doing that.
Editor's like, I don't have time for that.
Yeah. The new Pixel will be able to translate it. Eh?
What do you mean?
The Pixel 6.
Yo,
That's what the
is this
commercials
guy
are.
low-key a Pixel like?
Yeah. What's going on, bro?
influencer?
Is there gonna be an affiliate link down below, or what's going on?
This is not sponsored. This video is not
going
sponsored.
on
Yeah.
Okay, so
But if you want to Google, you can sponsor.
so you Google if you're listening. You know.
No, Google's always listening.
Yeah.
Google's listening from like 4 devices right now. You know?
What do you mean? Yeah, Google is the same.
So
Google sends us like a text message like broke boy, right?
yeah. Okay, so anyway, so you want to trade for the exotic goods, but you don't have the time and the resources,
Okay.
right? And so then a guy comes along and he has a solution for you. He's like, I will go into the market and I will buy all of these goods for you.
What should we name that guy? Let's do Chad.
Okay.
Chad. This is
Chad.
Chad. Yeah.
Chad's sick.
Okay. So Chad has a solution for you. So Chad, he's able to go to the city every day. He has, I don't know, I guess he lives in the city or he has no life.
He has
I don't
the
know.
resources.
He has the resources to go to the city.
Chad has a horse buggy, not a Mate Vandi.
Exactly.
Yeah.
So he goes to the city and he buys a large basket of all the exotic goods. And he buys everything. He's able to buy everything.
A little bit of this, little bit of this, little bit of this, little bit of this.
Everything.
Yeah.
And he comes back and he says, hey, you can buy a share of my basket. You obviously wanted the exotic goods.
Yeah.
I want some of
But
it.
you don't have the time to go and buy them.
And you want to also be able to buy all of them at the same time.
You want all of them.
And and it goes back to what Vino said before. You don't even know that you don't even know.
Yeah.
Right. So when I buy into Chad's exotic basket, I might get certain exotic items that I didn't even think of. I didn't even know they existed.
Exactly.
So Chad comes back from the city with a basket with all the goods that you wanted, the exotic goods in his basket, and he offers you a share of that basket in exchange. And in exchange, you give him money.
Yeah.
Right? And on top of the money, you give him something for his trouble for going there and buying it.
And what is that?
That is equivalent to management fees. They pay the MER.
Okay.
The management fee is essentially like almost nothing. What was it? 0.08%.
0.08%.
Not even
less.
point-
Than
Is that on an
1%.
annual basis or how does that work?
That's an annual basis.
Annual basis. So you pay Chad for the share of the basket that he bought with all the exotic goods.
Yes.
Right? Now you own that share and you can trade that share.
Yes.
Or you can hold it.
Yeah, you could buy the share. You can buy more of those shares from Chad if you think the exotic goods in that basket are gonna go higher.
Yes.
If you think they're gonna go up, if you think the value of those goods are gonna go up over time, you can buy more. If you think the value of the goods in that basket are gonna go down, you can sell shares. So that's kind of how that works.
Okay.
Let's see here. So yeah, now you have access. So now you and your friends have access to the exotic good market
That you never had access to before.
that you never had access to without actually buying any exotic goods.
Okay.
You know what I mean?
Okay.
You didn't actually buy any of them, but you have access to it.
Yes.
That's what ETFs aim to provide. You get access to it, and you guys are
Because
see,
Chad has access to all of them.
Chad
so-
bought them all. for you.
Chad's
Chad
doing
bought
the
them all.
work to make it happen.
It's Chad's money.
So Chad's a plug.
Chad, yeah, kind of, yeah. Chad bought them all, and because you can buy a portion of the basket that he bought them all in.
Yes.
If that makes sense.
Yeah.
Right, and it's openly traded on an exchange. That's why it's called exchange traded fund. Right, so it's something you can trade.
Yes.
Versus a mutual fund, it's kind of harder to. It's not traded on an exchange.
It's not on an exchange. It's more a company has these managers that deal with all these companies, and you deal with that companies directly.
Yeah.
It's not on an exchange.
Yeah, and mutual funds is a little more complicated. Like it's the pool of money is then given to like you said, the company, the asset management company, and then they have
they decide
professionals that manage that money, and then there's trustees that basically watch those fund managers to make sure that they're doing their
on
job.
Point. Yeah, yeah.
And that whole process is why the fee is so high. The fee is it could be 2%, it could be as high as 2 to 5%, I think, at times.
Yeah.
And the whole fee is based on the fact that the financial professional or the fund manager or whoever, it's based on their ability to beat the index.
So are they like?
It's all best. Like the index, the S&P 500 index is the 500 companies. What it does in that index fund, that's the benchmark. So every mutual fund you buy, mutual funds aim to beat that.
Okay, so are these mutual fund?
There's some mutual funds that are really, really good.
No, 100%. Yeah. But I mean, like, are these mutual fund managers, are they essentially swing trading these stocks, or
no,
are they like day
they're doing the
them?
same thing. They're doing the same thing as the index. You're buying and holding.
Yeah.
But they are actively managing it. Versus the index is essentially, when you buy an index fund, those funds just sit there. They're not touching it. It's whatever the S&P 500 does. If the S&P 500 makes a change, then it will slightly change.
But
to my understanding,
in terms of mutual fund though, like since they're actively managing it,
so they can sell something, they can buy something, they can do whatever they want.
If they start to see poor performance, they'll maybe switch their strategy around.
Like if tech is going down at a certain time, then they would start to manipulate that and kind of get rid of all that and go buy commodities and energy right now. For instance,
gonna balance things out.
Yeah, and you're gonna see how effective their strategies are in a moment when we see the stats.
When we see the next. Okay.
So we already talked about they can cover different asset classes, they can cover different sectors. There's ETFs, they can cover commodities, different types of stocks, different geographies. Like you can buy an ETF that's Asia only ETF.
Wow.
All the big companies in Southeast Asia or all the big companies in Europe. If you want to, if you're bullish there, you know what I mean. And or obviously North America, we already talked about that, but what about South America? You can buy,
it gives you access
global,
to all that,
you have access to all of that without actually going and
going on their exchange
and buying it, because you don't have access to because we don't have access to certain exchanges across the world. We have access to the NASDAQ, the New York Stock Exchange, TSX and stuff. We don't have access to for example, like you have to call your broker. It's kind of a little tricky to do that.
You can just buy the ETF like just like how you trade any.
Yeah, because those funds they're like Chad. They went to Europe, they went to Asia, and they put those stocks in their basket and came back to you.
Yes.
And they said, "Hey, do you want to share?" And now you have access. See what I'm saying?
And another thing I want to bring up, what I learned a little while ago is, for example, let's just say all these institutions want to invest in Bitcoin futures, but they're the way they do things, they're not allowed to, because Bitcoin it's just way too new, it's too speculative. But through an ETF, they can now do that.
Yeah.
So now that,
why is that?
It's just the way the institutions and the regulatory committees and all that, like they're very strict and safe with what they do. So they can't just go straight out and buy Bitcoin on a crypto exchange.
Yes.
But once Bitcoin had a futures ETF that does strictly with Bitcoin, they can now, all these institutions can now buy that ETF, and now they have access to a portion of Bitcoin. It's not actually buying Bitcoin, it's futures for Bitcoin, though it's a little bit different. When how
about ARK? Is ARK's is it in the ETF that they hold Bitcoin futures? I don't know.
If ARK owns something, most likely it's in the ETF.
It's listed as Bitcoin futures or something, right?
Yeah.
Okay. So Are we finished?
Yeah. That's all I wanted to.
So let's just give like another perspective. So there's 3 different ways to invest in the stock market, right?
Yep.
You can buy individual stocks. You can own the market, which is the index funds that we were just talking about, the ETF index funds. You own the market. You own all 500 stocks in the S&P.
Mm-hmm.
Or you can try to beat the market, which is actively managed funds, mutual funds. Mutual funds try to beat the market. They try to beat the benchmark, whatever the S&P 5, the index fund does. To be useful to people listening to this, I don't see any point in going through, mutual funds, the great mutual funds and everything, when you can just buy an ETF that tracks the S&P 500, because that's the benchmark that the mutual funds try to beat, and a lot of them come up short.
Yeah.
Say you have $1 million, and you have to split that $1 million among 500 companies.
Yes.
So you're splitting it pretty evenly, and then maybe you weight it higher at the top to the like Amazons of the world, right?
Yeah.
And now the other option is to try to beat the market. How are you going to do that? So instead of buying all 500, because some of those companies in the 500 are not even going to grow that much. You're going to be buying like...
Because you're spread out so thin now, right?
Yeah. You're spread out so thin, they're not going to grow much. Maybe they're going to grow like 1%. Whatever. You want the biggest growth, right?
Okay.
In the S&P 500, you have the top is really carrying everybody else.
Yes.
The tech is really carrying everybody else below, right? But then you own all of them, because when tech is down, the guys in the financials, the energy, like the Coca-Cola, McDonald's, Starbucks, all these guys are going to carry the tech.
Are the
you know what I mean? They're going to keep it stable.
They'll still keep
Are
that
precious
fund
metals and
going.
stuff in there as well? Like,
we're going to go through every single company.
Oh god,
the 500.
Bro, this is the best podcast.
Yeah, we're going to go through everything. That's what I want to see, because I haven't gone through the whole 500 list. I don't even know.
Yeah. Yo, if you guys are enjoying the show, make sure you guys like make sure you guys click the like button down below and subscribe if you haven't subscribed already, and share the podcast, man. We're still waiting on you to share the podcast.
So instead of stretching yourself so thin, you pick 100 of those 500 that you think are going to do.
Not you, but the fund managers are going to do
pick
that
100.
research. Yeah.
They pick 100. And they try to get a better rate of return than just owning all 500.
Yes.
Okay? And I'll tell you how they did.
Okay.
So also they charge obviously more compensation for the fund manager's perceived skill in picking winning stocks, right? And so just because the active managers charge higher fees, does that mean that they perform better than index funds?
You would hope so.
No, they just have a larger overhead. They have an office building.
The S&P 500 at the S&P Standard & Poor, they have an annual study of all actively managed mutual funds to their index. They compare it. Active study comparing them.
Yeah.
Oh, okay.
Every year.
Heaven's getting a little tired.
So
yeah, I'm actually sleepy right now. It's like 1 a.m.
Dedication.
Yeah.
Oh yeah.
So this info is from 2012 to 2017. Okay.
Yeah. That's amazing.
So there's 5 different categories of equity mutual funds. There's equity mutual funds that only buy large cap. So large cap is like the biggest market capitalization. So like the company's worth the most money.
Yes.
And then you have mid cap, small cap, international equities, just international only mutual funds, and emerging market mutual funds.
Yes.
So large cap, 75% of mutual funds fail to beat the index.
Those are poor numbers.
Mid cap, 90% of mutual funds fail to beat the index.
Even more poor numbers.
Small cap, 83% fail to beat the index.
Why do these mutual funds even exist?
It's a good question, man.
You know,
that's a great question for our mutual fund episode. We're gonna get to the bottom of this.
Okay.
Who's in charge of mutual funds? Is it the banks? Because the banks seem to be like their number one salespeople.
That's a great question.
Yeah.
The banks. I know the banks really push mutual funds. I know that.
Isn't that kind of weird?
Well, it's considered to be safe, right? They don't push ETFs. If they push ETFs, the banks would make no money on their mutual funds at all. If they told people about ETFs.
The companies that do like the managing of the mutual funds are separate from the banks, right? But the banks will take the clients and then invest their money into the mutual funds that are run by these other separate companies, right?
Okay, but here's the thing. Here's the bottom line, right? The bottom line is this. is there's three levels to this, right? There's you want people to invest, period.
Of course.
Invest your money consistently, right? If you're doing that, you're ahead of people who are not investing at all, right? Number two, you want to invest it, with you want to get a good return, right? You want to get a good return, obviously. Then you're doing great. Number three, like you want to get a return. Period.
Yeah, that's kind of why you're investing.
Get some sort of return. Even if you're not beating inflation, you're getting some sort of return. You're better than if you didn't invest at all.
Exactly.
Something over 0%.
Otherwise, you might as well put your money under your mattress and shit.
Exactly, right? And number three is when you start worrying about fees, about the mutual funds. So when I say they failed to beat the index, that doesn't mean that they did 0% or they lost you money. I'm saying that if the index did in those 5 years
9%,
if the index did 9% on average or 12% on average, these guys might have tried their best and they hit 7%. They still made you 7%,
and even after their fees, you're still walking away with 3-4%.
It's better than if you had your money under your mattress, if you had your money in savings, if you're just so scared because the market is volatile, it's so scary,
and you have a lot of money. If you're putting away a lot of money, that 3% could actually
imagine you have 100 grand.
Exactly.
3% of that is what, like 3 G's,
It's and
real estate has made my math skills pretty sharp, even at 1 a.m. right now,
So anyways, so I think I didn't get to the end of it here. International equities was 74% failed to beat the index, and emerging markets 76% failed to beat the index. Right? So essentially, what you want to do is look at the trend line of the mutual fund, and if you have one, and see if it has a track record of outperforming the market before you buy it. There are mutual funds that outperform the market consistently. There are ones that
Where would you pull this information from? Do they have like some sort of like website and shit, or
like in the brochures that you're looking at? If you already own a mutual fund, it would probably
some sort of document they probably send out, right?
This is really good info, especially for the people that already own mutual funds.
There's a lot of people that already own it just because that's all they know. Maybe your parents told you about,
and the financial advisors told them just do it like this.
It's like, I'm not saying mutual funds are terrible, like never own mutual funds.
We're just showing you that
because you're still participating in the stock market. You're still participating in the stock market.
Exactly.
And if it's a good mutual fund, some years it beats the market, some years it doesn't. But over time, if you invested 10 years ago, you're probably getting a really, really, really good return. Like overall, you've probably made like well over doubled your money.
Well, I think like a lot of people
a lot of people would like to have doubled their money, especially 100%. If it's like a good sum. Maybe you have 150 grand.
I feel like a lot of people that invest into it, especially like from the older generation, they are in for the long haul. Like I feel like I feel like they put their money into it and they're not really like looking at it like every single year.
Exactly.
Yeah.
Just let it compound and grow.
The fees are the fees, but like if you are consistently if your money is consistently going into it and you are invested, you're still invested in the same stock market everybody else is, the ETFs are invested in. It's just it's more narrow. It has a goal, it has a common goal, and you're betting on that fund. Right? You don't want to own everything. So the whole point is you don't own everything, so you leave out the companies that maybe don't grow as much, but then there's companies that might go through a bear market. And in those years, those companies don't do as well, and your return suffers, obviously. But you consistently keep investing, and over time, just like we talked about in that other episode where Steve says like, I don't know if it was in the post that we posted on our Instagram or not, but
you guys should go check out that Instagram, by the way. We have links to all that down in the description.
So this is what a gentleman by the name of Warren Buffett has said about index funds. Most investors will find that the best way to own common stocks is through an index fund that charges minimal fees. That's all I'm gonna say. That's it. Right? Like, I think whether you get charged higher fees or lower fees, the reason you haven't owned a mutual fund is because you want to sleep well at night. You want it to be completely hands-off investing.
That you do own a mutual fund, or you don't?
You do.
Okay.
because you wanted to be completely hands off, and you wanted your money to
You want somebody else to kind
you
of
wanted
manage.
someone else to manage it, and you want it to grow.
Because
Whether they beat the market or not, it doesn't matter, because over the long term, your money is growing.
Yes.
If you're getting your statements and shit, and you're seeing, how your money is doing.
Yeah.
Obviously, if your money was doing poorly, you would already pulled out your money.
yes.
Yeah.
Right? Like, especially if it's a large sum of money, right? The only thing we're saying is, if somebody is starting out, they don't already have a mutual fund.
Yes.
They don't have their money invested. In my humble opinion, not financial advice, this is an ETF does the same thing, and in a lot of cases it beats mutual funds, as we just said. 75% of the time, 90% of the time, 86% of the time,
It does not beat the market.
Go
The-
tell that
the
to
index fund
your
goes better
local
than the mutual
brick and mortar bank and see. Well, watch them stutter. Yeah.
right? Like, you have to look at the track. You can see, as we looked at, Vino looked at earlier today off camera. You can see the trend line.
Yes.
We looked at one
You
of them.
can compare it to
and the index did slightly better.
slightly better than the ones we were looking at.
Yeah.
Right. So just to go over this again, like, you may not have any, or you may already have the mutual funds, but if you are going to go into the market, just do the research. Look at these websites that we're going to provide.
Links are all going to be in the description to everything that we're talking about.
Yeah.
So we went to Vanguard Canada's website,
Okay.
Yes.
vanguard.ca, and we went to products. I hit products, went to ETFs, and I scrolled down to VFV. VFV S&P 500 Index ETF. And you can see here, we can see the chart here on the screen here. I don't know what the since inception. So they started back here.
Since the beginning. What is that?
$25?
November.
This is what we're
Does it
sitting
say
at
the
right
year
now.
there? No.
Okay, so there's the chart,
Okay. I mean, that's a beautiful chart.
right?
Yeah.
So this is like, as I've said in multiple episodes and posts and stuff.
Up and down.
Up
But
and-
overall,
Yeah.
you're going up.
No,
higher,
I mean,
higher,
like,
higher.
this is VFV. This is the S&P 500 for Canadians.
Yes.
Where you're owning the 500 stocks. Remember the basket.
Yes.
Yes.
You get to own the basket. Some Chad went to the United States and bought all 500 stocks.
Yes.
In
From-
US dollars. And you get to buy a share with your Canadian dollars.
It's
Without-
already
and it's already been
automatically
converted.
Yeah.
Okay.
right? And you get to enjoy the access to the growth here, right? And you can see the management fee of 0.08%.
So what's the benefit of buying the VFV over the VF? Is it the VFF?
What are you talking about? What's the other? What do you mean? Like VDY? VDY is dividend. This is more.
What's the ticker symbol for the S&P 500 for the States?
So no, this is basically
VOO.
it's the same. It's the same,
VOO.
it's the same thing, but this is just the Canadian version.
It's just the
right?
Canadian
But
version.
can us as a Canadian buy the VO?
You can buy VO as well.
So what's the difference? Like, it's just
This is just, you don't have to
Well, you're not going to
convert
be
your
doing
money.
conversions, and you would be losing a little bit.
okay.
To
You're
fees
losing
and
a lot of
things
money
like
to
that.
conversion, depending on how much money you're converting, right?
Yeah.
But you're not losing any money, but
This is Canadian dollars in Canadian
It's
dollars.
already converted for you. So.
I'm not
But, like,
sure
when
how
they
it
do
works,
the
though, but
conversion.
yeah.
Is there like any sort of like loss that happens? Like in terms of like, is there like a conversion?
Well, I'm sure. Like when they charge you for that share price, they already put in all the fees and stuff like that. They go.
So yeah,
through.
this here right here, the NAV price, what you see here, 99.91. This is what
is it the Rexdale NAV?
yeah. So NAV stands for net asset value, not NAV the rapper. But yeah, so this NAV price is literally what the value of your shares are worth
Yes.
after expenses.
Okay.
Okay.
The net
Expenses are already pulled out from there.
What do you mean by expenses again?
The management fee right here, 0.08.
0.08 management fee. MER.
Yeah.
Yeah, I guess the management fees, conversion fees, whatever fees they incur.
Okay, so let's go overview.
That's very reasonable.
Yeah.
Yeah.
The 0.08.
Yeah.
Oh,
so so let's go through the overview. If you guys are you guys are interested in this, we have a we have the link in the description below. You guys can follow along here. So the Vanguard S&P 500 Index ETF seeks to track, to the extent reasonably possible and before fees and expenses, the performance of a broad U.S. equity index that measures the investment return of large capitalization U.S. stocks. Currently, this Vanguard ETF seeks to track the S&P index or any successor thereto. It invests directly or indirectly primarily in U.S. stocks
of U.S. compliance companies.
So seeks to track blah 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 to index to the extent possible. Invest. Okay, this is just literally highlights this, right? Uses efficient, cost-effective index management techniques. Employs a passively managed, full replicated index strategy to provide exposure of large U.S. companies.
They're basically just saying they're much more efficient than investing in a mutual fund, right?
Yeah. So assets under management $6.308 billion as of March 11th, 2022. This is a chart that shows you the growth of $10,000.
Okay.
This is from March 2021 to today.
Okay.
You put 10 G's in March, you're sitting at you made about $2,500. This is you're sleeping great at night. You put 10 G's and you forgot about it.
Yeah.
You made $2,500 just because by investing in the best 500 stocks.
That's 25%.
Yeah.
That's amazing.
That's better than.
It's better than a lot of.
Is it better than putting $10,000 to your savings account and waking up with $10,000 2 years later?
$10,000 that it's that's its nominal value. Its real value is
minus inflation. You're buying. You're still $10,000. Your buying power is like way less.
Number of stocks held. They hold 507 stocks in their basket.
Wow.
Right, that you're buying into. Right. Median market cap $245 billion.
Yes.
That's what it's worth. That's the total. That's the market, the worth of all of their assets combined in the basket. Okay. $245 billion.
Okay.
Price to book ratio. Return on equity 22%. Earnings growth. Okay, here top 10 holdings. We've gone through this in previous ones.
Yes.
You got Apple. They hold 6.9% of the portfolio is Apple. 6% is Microsoft. Alphabet is 4.2%.
Alphabet is owned by Google. Yeah, we learned it from the last episode.
Yeah. Amazon 3.6%. Tesla 1.9%. Nvidia, Berkshire Hathaway.
Nvidia popped. I don't remember from the last episode, but I think Nvidia made its way up there to the top 10 after the crypto mining, or was it just in general?
Yeah. So now, like everything in the future, right? So whether it's crypto mining, whether it's anything to do with the metaverse. You need a graphics.
Yeah. So after that whole transition is when Nvidia made the top 10 of the S&P 500.
And in the future, you cannot have any of these things in the future without Nvidia.
Without all these processing
chips. They have a monopoly, right?
I think AMD or Intel started to get into the game.
AMD is.
I think it was AMD.
They're also
Intel. It was Intel.
Yeah.
It was Intel.
Mm-hmm.
Okay. And then you can see here the breakdown here, the sector weighting. So. In technology is 28%. Berkshire Hathaway, they own Geico.
Okay.
They own Coca-Cola. Mm-hmm. He owns Coca-Cola. He owns a good chunk of Coca-Cola, Apple, Dairy Queen, right? And they just want exposure to his holdings, so that's why they put it there because of his returns, right? It's weighted based on the performance, right? And size. Johnson & Johnson, United Health, and Meta, right?
So Warren Buffett invests into companies that are like very profitable, right? So is that to say that Dairy Queen is a very profitable business?
No, he invested in it way back then. Like something that has a big moat.
Yes, I remember
moat.
Yes.
Remember moat?
Yes.
So it has a moat.
It's a company that
it's lasted.
Really
look how long it's lasted.
Yes,
easily.
Look at how long Coca-Cola has lasted.
Yeah.
He knew. He saw something. But here's the thing about Warren Buffett. You don't see his losses. You only see his wins.
Yeah.
He invests. It's not saying like he's perfect. He loses too.
Yeah.
But the thing is, his wins, he wins big.
Yes.
He like here's the thing with investing in general, right? Like you can invest $10,000 into 10 different companies.
Yes.
Right? But you do your research, you really like look into those companies, and you do your best due diligence on all those companies. So we're looking at the exported spreadsheet of all 507 holdings inside VFV, right? So Apple, they own 6.88%, and they own, the market value is about $444 million, right? This is how many shares they own. Microsoft, they own 6%. Amazon, we know the top ones. Apple, Microsoft, Amazon, Alphabet. This is A and B, I believe. They have Class A shares and Class B shares.
Yes.
Or Class C shares. Tesla, Nvidia, Berkshire Hathaway, Facebook, United Health, Johnson & Johnson. Okay, now let's get into the ones that are not in the top 10. You got JP Morgan. You can see the percentage that they own. A percentage of the total that is weighted to this stock company. And you can see the market value. This is all in millions right here. Okay. This is how much money they have in JP Morgan, Procter & Gamble, Visa, Home Depot, ExxonMobil, Bank of America. See, let's stop on the ones that we know,
MasterCard, Chevron, Walt Disney, Pfizer.
This is I think I know that one. I don't know.
Coca-Cola. Didn't Pfizer get delisted off the stock exchange?
This is as of I don't know.
This one was February, right?
This is February, yeah. I'm not sure.
Okay, no, they got delisted in March, yeah.
Okay. Coca-Cola, we got Costco, we got Pepsi, Verizon. Cisco, Adobe, let's see, Wells Fargo, Salesforce,
Comcast,
what do we got here? Walmart, McDonald's, Nike, Netflix, AT&T,
Texas Instruments.
We remember I think it was
Lowe's.
episode 2 we went through like the top 20-year market cap.
Yeah.
Now we're getting into the lower ones here.
I remember you briefly mentioned Lowe's as well.
Yeah.
So I think it had to be under.
Lowe's is up there. This is like, you can see the holdings. You can see the top. It's all weighted, right? So the further down you go this list, it's less weighted. Yeah. Less money is in those companies, right?
Yeah.
You got PayPal. So remember, this is like individual stocks that Chad has gone and bought with his money, and you get to buy
after lots and lots of research.
Yeah. No, it's not really. It's based off of the Standard & Poor's research that they did on these companies, right? Chad is not doing the research.
Can you say that part again, bro?
Chad is not doing the research. It's Standard & Poor's research.
Yes.
That determines these 500 companies.
And Vanguard. Vanguard is not part of.
Vanguard's selling the ETF.
Okay.
Vanguard is Chad. Let's just say Vanguard is Chad. Okay. That's in this example. Vanguard is Chad.
Okay.
Vanguard goes and buys all these companies with this money.
Okay.
And you get to buy a share of them. Right? Okay, so you got PayPal, you got Honeywell. Actually just bought a Honeywell what's it called? The humidifier.
Oh, humidifier.
Nice.
Okay.
Yeah. Let's see here. Oracle.
Vino's about to get upset. He's like, "Hey, why don't you call me for this?"
Let's see what else we got.
Oracle.
Goldman Sachs, Boeing.
Yeah.
Starbucks.
Wow, Starbucks is up there, eh? Wow.
Yeah, BlackRock.
Oh yeah.
See this. You can see asset
General
management
Electric.
Here. Yeah, General Electric. Caterpillar.
It's construction. Yeah.
Micron. What's his name?
I thought I said MicroStrategies.
No. Micron is actually a. It has to do with chips. It has to do with the chips.
Okay.
It'll come back to me.
Semiconductors.
Does it have to do with semiconductors?
No, because over here it literally says right.
It's late. Yeah, we'll get into that one in another episode. Altria Group. I believe that's tobacco.
Altria or cannabis or tobacco? Okay, tobacco.
Altria Group.
Yeah.
Tobacco. They sell so much money.
Top, right? Yeah.
Right. We got. What else we got here? 3M.
Chubb.
What's Chubb?
It's
I think it's security systems.
Property.
Right?
It says property.
Yeah, it's probably still the property security, maybe.
Yeah.
PNC Financial.
3M.
Yeah. What else we got here? T-Mobile. Ford is here. Estee Lauder.
There's a ton, right? We're only at like 127.
Are we gonna actually go through this whole thing?
There's 507 companies in here.
There's probably some like low-key ones that we've heard of that are down here.
Waste.
FedEx.
You have waste management. Is that management?
Yeah. Moderna. I heard of Moderna
Pioneer.
before. Yeah. We got what else we got? Marriott.
Johnson
Controls.
Those are different jobs. Johnson.
Yeah, Johnson was at the top. Remember?
Yeah, Johnson Controls, like they do a lot of HVAC.
O'Reilly Automotive.
O'Reilly, I never heard of that.
Yo, it's big.
Chipotle.
Bro. If you're in Canada,
and
you want more information,
yes,
the links are in the description below. But if you just want to head over to your browser, go to vanguard.ca.
Yeah.
Products, ETFs. Scroll down, go to VFV. the Vanguard S&P 500 ETF. You'll get on this page. You can read about it. You can go through the holdings. You can go through all 500 holdings if you would like.
You can go through the percentages.
It's amazing. They have it.
They have exactly how much money they have in every single holding.
To the T.
And it's updated quarterly, monthly, I don't know, but quarterly, at least quarterly.
Yeah, and
it's February. We have the
probably broken down into PDF. They have Excel sheets. It's
a lot of information here.
Yeah, you can spend a good time. You can spend a good chunk of your time. You learn a lot about literally.
Yeah, and honestly, like I don't know why ETFs are not pushed. It has to be because otherwise.
You think it's like a risk thing?
You know, I really want to like really do a deep dive and like really figure out like the history of it.
Yeah.
You know, like you asked, that's a great question. Like I want to figure out the history of it, like why, because I don't know.
Yeah.
Right.
Yeah.
Like why mutual funds exist when, you know, if you push ETFs. Well, I guess, you know, it's capitalism, right? Like you gotta you have to make money, right?
Yeah, there's got to be some sort of business. There's got to be some sort of fees for people to make money, and you know, right?
You know, like it's you know, at the end of the day, like, you know, that's why we have this podcast, right? You want to you know, give facts, that of information that can benefit you, but at the same time, you know, it might be different from what is the norm, what you already know, what you've already been told, what you've already read. And you're, you know, like Vino said in the first episode, you don't know what you don't know, and you don't even know you don't know it, because that's literally what it is, right? Because you know, mutual funds is how you invest your money, and that's all you know, right? And that's cool. Like there's nothing, we said it earlier, like there's nothing wrong with that at all, like whatsoever.
But there's different options.
There's different options out there. That's it. That's all I'm saying. And we're, you know, we'll hopefully have a future episode. We will have a future episode about mutual funds and you know how mutual funds came to be.
Yes, the history.
Why ETFs are not talked about as much as mutual funds. Mutual funds, everybody's heard of mutual funds. Not as many people have heard of ETFs. We thought it was ETFs, like at the beginning of this episode, right?
I actually didn't think that. I just
I'm just joking. You know what I'm saying? But like, you know what I'm saying? Like we didn't really understand it. Even me. You know?
Yeah, me too.
So hopefully you guys learned a lot. And I hope you guys listening learned as well.
Just even this website itself is like, it's like a breakthrough.
This is like public information. There's so much stuff that's public information.
Amazing. Yeah, you know? Yeah. Sometimes it's as easy as a simple Google search. You know.
Yeah. How to invest in the stock market,
or even like S&P 500, like the Vanguard website. Like this is like, I didn't even consider them to have a website. Like I honestly just thought everything would be just kind of done directly to like the stock market and yahoo.com. You know, that's just my ignorance, right?
Yeah, but you know, you literally can buy. That's how you buy it, right? You buy it through your broker, essentially. Your brokerage, you know, whoever you're with, you know, Wealthsimple, Questrade, TD, whatever, RBC, whatever bank you're with, whatever, you just buy it. But this is like, you know, look, they have it like products, right? This is products that they sell, essentially.
Yeah.
Like
financial products, right?
Yes.
So it's you know, I don't even know if they even market this. I don't even know if Vanguard like spends any marketing dollars at all.
Off camera, we were actually talking about Ferraris and how they don't spend any sort of money on marketing.
Yeah.
And you know, the people who are passionate about marketing, passionate about Ferraris, they do all the marketing for Ferrari, right? So I think Vanguard or the S&P 500 is something similar to that, where like they don't need to come out and be like put like a TV commercial. 'Cause realistically, if they were to spend X amount of dollars on marketing, like, and they put on like a TV show, like the average person who watches TV doesn't really invest much like that, right? Yeah, there's a, you know, so I don't think it makes sense for them to market themselves, right? So I think that's why
they probably do most of their marketing through.
I think we kind of, you know, this is just, you know, we don't know this for a fact. We're gonna find out. But this is just, you know, based on what we're talking about. It kind of makes sense, right? Like if these guys charge 0.08% and they don't market themselves, whatever institution or individual or bank or whatever would see this and be like, okay, well, they don't market themselves at all. We have a huge customer base that we can market to.
We can market. Right?
We can market the hell out of this.
And they do market the hell out of it.
And our customer, because you guys don't market, our customer base doesn't know anything about this stuff.
Yes.
So we can literally we can sell them our product. They don't know your product exists, so we are the only product that exists in their mind.
Yeah, and
maybe that's how it works. I don't know.
That's why there's people like us who, you know, try to deliver as much information,
value.
Quality value and information that we come across, because we do the marketing for the people.
But you know, the bottom line, I just, you know, the takeaway from this episode should be, you know, oh, by the way, I forgot to give credit to that 1800s village example. Remember that example with Chad?
Yeah.
Right? That came from an individual by the
Good
name
old
of
Chad.
Sahil Bloom. I watched a video on CNBC where he explained it very, very simply, and I was like, wow, that's a great way to put it. That'll be in the link below.
Okay,
that video.
check that out, guys.
It's pretty much exactly what I said.
Yeah.
So so to conclude, you know, I hope the takeaway from this is that, you know, people watching this or listening to this, essentially, you know, like, you know, it doesn't matter if you're invested in mutual funds, if you're invested in ETFs, if you're invested in individual stocks, just invest your money. Learn to invest your money and invest it consistently. You know, after you're investing consistently, you know, then worry about your returns, and then worry about fees. You know, at least if you want to be hands off, then either pick ETFs or mutual funds. Pick one. Just get educated on both of them. And pick one. It's like when you're buying a house. You know, you don't want to just look at the first house you see and you buy it, right? You know what I'm saying? It's the same thing, right? You don't want to just, the first product you're offered, you don't want to just say, okay, cool.
Because at the end of the day, it's like, at the end of the day, you're working for your money, but you want to deploy
just
your money.
It's just peace of mind at the end of the day, right? Like as long as you're investing, that you're already ahead of the curve. But if you're more informed, then maybe you'll save yourself a little bit of, you know, you'll get yourself a little bit extra in returns by saving on those fees. You know, it's not the end of the world if you pay a little bit more fees for that peace of mind of, you know, a system that you trust and whatnot. But, you know, there is another product called an ETF from Vanguard that essentially does the same thing, and you pay less fees. That's all I'm saying.
And you're getting higher returns.
Wow.
Right? So
more often than not. More often than not, you'll get a higher return. Right, based on
and it's not financial advice.
Based on statistics, that's it. It's just based on statistics. It's not an opinion or anything. But you know, it is what it is. But so that's pretty much it.
Okay.
So we're not gonna do the thing where we did in previous episodes where I think actually we cut it out. But we used to say on next week on Wealth is Possible, we're gonna be talking about this. We stopped doing that because essentially we don't why do we stop doing that?
Well, we're not planning like
we don't know what the next episode we're gonna do.
We're trying to stay more current, like what's
we're trying to provide the most value currently right now today
to like kind of what's happening in the world events. And we also have we also don't always go in order as well, because some podcasts we drop a little bit later, and some
there's a lot more work put into a certain podcast in terms on the back end in terms of editing, right?
So
you know on our YouTube channel we're still going to be releasing videos talking about specific topics. If you want any specific topics, if you want us to go over that, just let us know in the comments.
And also if you guys check out our Instagram, we actually did do a little bit of a change in the content that we provide on Instagram. So previously we were just doing straight up just like cuts from our reels, from our podcast, turn them into reels. But now we do that with a combination of dedicated reels made for our
specific
Instagram.
Targeted specific purposes for providing value for specific things,
right? So you know, we pump out content in that sense too. So that you can either find us on Instagram at Wealth is Possible. We also have links to all that down below, and we also have we're also on TikTok as well. So it's pretty much whatever content we have on TikTok is the same content we're gonna have on our Instagram. So same thing on TikTok is at Wealth is Possible. Link for that will be
in the description below. It's already there.
It's all there. Yeah, cool.
And one more thing, you know, we're not saying what's on the next episode, but however, if you want to see what the next episode that comes out is going to be about, we will have the teaser for that episode uploaded the week before the episode comes out from now on moving forward, on a Thursday on YouTube and on Instagram. So make sure you're subscribed and follow on Instagram, and you'll be able to see that the week before.
Nice.
Awesome.
Well, probably. I think we might do. Maybe we'll do a different clip on both platforms.
Yeah.
So that way, we don't put the same thing on both platforms.
Yeah. And you guys have the comment section down below, so make sure you guys are utilizing that. If you guys have any questions and stuff about anything that we talk about, or if you guys want us to bring up specific topics, or if you guys want to see an episode on a specific topic, just leave it down in the comment section below. If we get enough likes on that comment, or if we get enough comments on the same type of topic, then we can bring up those topics, and we're more than happy to cover it for you guys.
Sounds good.
Yeah.
All right, that's about it.
Thanks for watching, guys.
Awesome, guys. And if you guys made it this far, we appreciate you.
Thanks for watching. Thanks for listening.
Yeah, thanks for watching. Thanks for listening. Make sure you guys are sharing our content. And if you haven't hit the like already, bro, come on. Just go hit it, man. Like, mans are mad tired and shit right now. But, one more thing before we do get off here. I just want to appreciate everybody who reached out to us. We got a lot of positive feedback on the content. We love that shit. Let us know what you guys like about our content, and let us know how we can improve.
And remember,
wealth is possible.
Oh yeah.